Welcome to today's mentoring session. Today is 1st of October, 9:32 p.m. And as usual, first I'll be starting with the weekly sectoral analysis, starting with Nifty, Bank Nifty, and all the way we'll be going to CNX Midcap Index. And once this is done, I'll be taking your queries for the positional and the swing trading setups. So as usual, all of you know, I always go for the top-down approach. What we can see over here is very clearly that Nifty is in a strong uptrend. Last month, if you check properly, the candle which has been made over here is a sort of spinning top, and it has a slightly bigger wick on the upside. So some sort of selling pressure has come up. RSI is around at 78.92, which is almost near 79, which clearly means that we are seeing some sort of selling pressure at higher levels. Now, once we go to the weekly chart, what we can see over here is last week I had clearly told that once price closes above this particular Fibonacci extension, it is very, very important that follow through buying should happen. What has happened over here is immediately this week prices have come down, and this candle pattern is not looking very comfortable. It's not looking very good, especially if you're a bull. Does it mean that we have topped out? Does it mean that market is going to crash? As of now, nothing seems to be evident, but yes, some sort of selling pressure is coming at higher level, which is around 17,950 or 18,000 levels. Now, if I look at the daily chart, what we can see, we have a higher high and we have a lower high in the RSI, which is nothing much. It is just a sign that the momentum is waning. The upside momentum is getting weaker. This is not a sign of a sort of top out or something. But yes, it clearly seems that market is a little bit tired to go higher. Now, for time being, I will just switch to this particular chart of Nifty futures and I'll apply the volume profile indicator. If you see closely what has happened today, prices have exactly bounced back from this level. This is 17,394, 17,390. Why? The reason for that is if I apply Fibonacci along with volume profile, you will see that the prices are hovering around 23.60% Fibonacci retracement. And we also have a volume profile, high volume has been trading on over here, which is called the point of control. So basically, somewhere between 17,470, 450 to possibly somewhere around 17,000, you can say 400. This entire zone seems to be a strong support for the market. In case if prices close below this and sustain for 1 or 2 days, maybe we can see little bit of selling coming up and prices can retrace slightly lower, somewhere around 17,200 or maybe even 17,100 levels. Now, we should understand that how much we have rallied. Market has rallied recently from almost 15,500 to almost 18,000 levels. So this is a very good rally. And within this rally, if we retrace a little bit, I don't think so it is much of a concern. Yes, for swing traders, you have to be watchful. You need to be very, very careful when you are initiating trades. But apart from that, as of now, nothing is evident. And until and unless we don't break this support, possibly some sort of up-down movement, sideways consolidation will happen. Especially short-term traders have to be very, very careful while you initiate trades. Don't jump onto trades just by looking that we have a short-term breakout and I just want to buy it. No, be very careful. Pick your sectors properly and then pick your stocks. Bank Nifty. Now, if I check the monthly time frame in Bank Nifty, as of now, nothing seems to be evident that there is some sort of problem or something. Nothing is evident like that. Even if I go to the weekly chart, nothing bad is visible to me as of now. Only thing what I can see is this previous high is providing a resistance to the Bank Nifty, and generally it does all-time highs. Generally, they do give a lot of resistance to the price, and you can see prices had managed to close up above this level, But just by closing, nothing is going to happen. You always need a follow-through buying coming up in the next week or the next day or the next month, depending on that time frame or of that chart. So over here, what happened? We did close above that level, all right, somewhere over here, but follow-through buying was not seen, and due to which in the daily chart we saw prices crashing back over here. Nevertheless, is overall chart looking bad? I would say no. Charts are not looking bad. You can see this hammer has been made somewhere around, especially we can see this cluster of candles coming up. So this seems to be a decent support. All right, this seems to be a decent support. You should check your trading setup, and if you can find any swing trades in the banking stocks, you can go for them. For me, the picks will be, first of all, SBI. Oh yeah, SBI is looking good. I think I had already initiated this at 450. I have booked 50% somewhere around 463, and I'm holding the rest of the quantity. Overall, SBI looks good. HDFC Bank is my second pick. All right, and my third will be IndusInd Bank. But IndusInd Bank, I feel it could consolidate a little bit here and there before it, goes on the high side. So these are the three stocks from my side. If we look at the private banking chart, I think it looks very much similar to the Bank Nifty chart. Overall, things are looking okay. We are almost at the support. This is a decent support, and I think you should look for swing trades basically, and stocks I have already shared with you. PSU banking chart is totally disconnect with its overall stocks. If you check properly, if you check SBI especially, because I am only tracking SBI right now, it's looking totally in contrast with this particular chart. If I open the chart of SBI right now, you can see it's looking totally different. And now if I open the PSU banking chart, it's looking totally different. Why? The reason is this particular resistance band. This particular price consolidation over here is getting consistent resistance from this particular resistance band, and I've repeated this many times. Until and unless this particular band is not surpassed, we won't see any fireworks. Overall chart has improved this week. We can see a decent green candle, a big green candle happening over here. But what will happen at this higher levels, somewhere around 2650 or 22598, is yet to be seen, because we have seen as soon as prices do go higher over here, immediately the prices come down and retrace. Why? Because of the resistance band in the charts in the monthly time frame basically. In the daily chart, we can see an inverted hammer over here. This is again a result of the resistance which is coming up at higher levels. All right. Now let's go to the metal pack. In the metal pack, what we can see is the overall index is extremely overstretched. You can see RSI is also somewhere around 77, right? So what we can see over here is overall trend is up, but the sectoral indices are looking extremely overstretched. In the weekly chart, what we can see, the RSI is sort of coming down, prices are consolidating, and I think today little bit of pullback has happened in the metal. But as of now, I'm not interested that much in the metal index, because somehow I feel some sort of consolidation is still required in this particular sector before it starts giving you decent trending profitable trades, at least for swing trades. I'm not talking about positional trades. I'm still not ready for this sector for positional trades. Even for swing trades, I feel some sort of consolidation is still left. Once that consolidation is done, probably after that, we'll start getting decent trades in this sector. Although the pick of the stocks will remain Hindalco. It has sustained at higher levels decently well. This is one of the outperformers. Auto stocks, if you remember last week I had told, if this particular level is surpassed, you will see somewhat buying coming up, and this has happened in just one single day. You saw Maruti going higher, perform nicely. So markets are listening to us, and acting accordingly. You can see this big nice candle on the upside, and the pick of my stocks last week in auto sector was Tata Motors, and it has performed decently well. Although some sort of sideways move or consolidation is probable before the up move continues, but overall the bullish stance on Tata Motors will be continuing. It's one of the stocks which is looking extremely bullish in the auto space. All right. If you remember in the previous sectoral analysis, last week I had clearly said we are in an uptrend, but we are also near some sort of resistance. If we inch higher and if price tests this particular resistance level, then some sort of profit booking would be expected, and exactly same thing has happened. You can see prices have dipped down this week. If we close below this particular low of this hanging man, although this hanging man is not very powerful, but we should not neglect this particular hanging man. We should respect it. If we have a weekly close below this, then possibly this short-term profit booking can be aggravated slightly more. Overall, it looks all right. Some sort of consolidation, some sort of profit booking here and then may or may not happen. But overall, once the consolidation is over, I think you will start seeing the prices going back higher, and it may test somewhere around 18,800 levels once more. But a little bit of consolidation, I feel, is still left before that up move starts. IT pack, finally, I think market has, started listening to us. I think from weeks or maybe a couple of months, I don't know when, I have been continuously telling that IT pack is extremely overstretched and it needs a cool off. And there was some point of time, possibly last week or maybe even a couple of weeks back, I was not even ready for swing trades in this particular pack. And you can see within a matter of 4 to 5 days, the IT index has melted very nicely. So this was expected if you keep patience and if you hold on to your views. I think today or tomorrow market will come back, and you can see such a big red candle. If you see in this entire chart, this red candle is one of the biggest, and the reason for that is obviously the sector was overstretched and this particular extension has played its part. 1 week it closed above it, and the next week immediately it came down. So even after so much of correction, the question is, are we ready for the IT index to go higher? Personally, I would say I'm still not ready. I would wait and I would want to see how it trades in the next few days. And once I see what sort of price action is coming up over here, then after that maybe I'll take my view on that, because yes, we are trading near some sort of support, this 23.60% support. I'm not denying that, but still I do have my doubts. So I'll wait and then we'll see how everything pans out. Pharma, I believe, the momentum is not very strong in the monthly time frame. Since last 4 months, sideways move has been happening, but overall the trend seems to be decently strong. In the weekly chart, I had been repeating, I think since last 2 to 3 weeks, that trend is up, but some sort of consolidation is possible, and after the down move, we will see some sort of pullback happening. That pullback has happened, but still I feel some sort of sideways move might come, and once that move has been done and we close above this all-time high, then I think so decent up move will happen, and the pick of the stocks will remain same, Sun Pharma. Even last week I had told this, and Sun Pharma has played its part. You can see it has outperformed again. It has gone up. FMCG. FMCG, you can see it is in a strong uptrend. But if you see this particular candle over here, this candle, it is a clear-cut inverted hammer. It is a shooting star. So it is clearly evident that some sort of profit booking is coming up at higher levels. In the weekly chart, if you can see properly, we have this first candle is looking like a hanging man, and these two are small shooting stars, not very big, but still they are. And this is a big red candle. Although it has some sort of wick on the downside, but considering that these couple of candles have come up at resistance, I will not devaluate the red candle. You can see exactly at the resistance it has come up. So some sort of profit booking, some sort of consolidation may continue in the FMCG index. There could be one couple of days up, again couple of days down, sideways move. This sort of things might happen until and unless you don't see a very sharp rally coming up. Don't jump onto the FMCG stocks. Wait patiently, you will get your chance. I'll just say that. Trade as less as possible. Realty stocks, I had clearly told that after some sort of consolidation, the rally will happen, and realty stocks have performed very nicely. Question is, will this rally continue? According to me, yes, this rally will continue, but only in the short term. I can see the prices are slightly overstretched. So maybe little bit of sideways consolidation is possible, and after that consolidation, I think the uptrend should continue. I don't see any problem for that. Mid-cap index. Now here I think people need to be very, very careful. What has happened over here is, I think we are very, very near to the Fibonacci extension over here, which is somewhere around at 31,050, and the prices are 30,396. So we are very, very close to that particular resistance at higher levels, and one should be very careful about that. If you're holding any swing trades or old positional trades, you should be mentally ready that some sort of profit booking can come in the mid-cap index. So I would request all of you to trail your stop losses as aggressively as possible, and if you get stopped out after a few days, it should not surprise you. Being mentally ready, getting stopped out about your trades is a very, very important quality of a trader. All right. And currently the market is not shaped in a way where you can trade very aggressively. Try to trade as less as possible. First, see how the markets are panning out, because as I told you that if Nifty breaks the important support level somewhere over here, the lows of this 17,400 or somewhere over here, if these lows are broken, you will see prices coming down a little bit, retracing a little bit. And if this does not happen, then some sort of consolidation might also continue. So this is not a very good time to be aggressive. I'm not saying not to trade, but trade as less as possible and be very, very careful about your stop picks. All right. So I hope this weekly sectoral analysis has helped you. Thank you.